Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, February 1st, 2012 is sponsored by RealTick. All right, let's get right into the mix, guys. Markets are just off the highs of the day, but it is a solid rally day. Dow's up 126 points, Nasdaq's up 37, S&P's up about 15.5 on the day, just a little bit above 1% across the board. The key to recognize is not the fact that you're up today, not the fact that you were down yesterday or the previous day by just a hair, but more so the levels. It's all about the technical levels when you understand where the market is headed. And the first thing you have to recognize is the fact that you have not taken out the pivot 133.30 level on the SPY. That by far is the level to beat. Essentially, as long as we stay below that level, you would look for continued weakness in the market. Even with a rally like today, you wouldn't really get excited thinking the market's going to break up to the upside and go through that level until it does. Once you close above, and this has to be on a closing basis, once you close above that 133.30 level, then you can say, okay, now they possibly can take this market higher. But again, too many people out there, especially the amateurs, seem to get caught up, oh, it's an up day on Wall Street, they're never going to let this market down, light volume, blah, blah, blah. Nonsense, folks. It's all about the levels. Just like I was able to perfectly pinpoint where we would have this pullback in the markets, it's still a level of significance there. All right, and with that, again, you can see the market's inched up, and what I did was I took this pivot high and put it through this pivot high. Now we have another resistance area if we go a little bit higher into that point where we'd actually look for a little bit of resistance into that trend line, especially if it hit there tomorrow after a little bit more of a pullback today, would give us a good basis for some resistance. Markets here are inching up. You can see very clearly after a little bit of a pullback, we closed below the 20, never confirmed. Market's inching up a little bit right here. If we head back to a double top, that's your resistance line. On any continued fall, you're going to look for a little bit of support right in here. See how this little base pivot line, multiple lines hitting this area, that's going to be your support level, and that's right around the 132.60-ish area. All right, so we'll continue to watch this market into the afternoon session. But again, good economic news out of China overnight helped the futures start out. Then the dollar continued to tumble as the euro gained some strength. That helped the markets even more so. All in all, I mean, that's what's driving this market right now. All right, people have forgotten that there's any issues in Europe, which is fine. It'll eventually reemerge. But right now, everything is good. The world seems good. ADP jobs number today was decent. We'll get the jobs number, non-farm payrolls on Friday, along with the unemployment rate, and those are the things that the market will look to tomorrow and on Friday. Now, the other thing to just keep in mind here, folks, I believe Bernanke is testifying tomorrow. Now, it's interesting because the markets are very strong in the wake of Amazon earnings, which were not good. Amazon's actually down sizably, although it's off the lows of the day, but still down $16. But this is even being shrugged off by technology. I mean, you could take a look at Google today. Google's up $3 and change. Apple's not as strong, only up 22 cents. A little bit of weakness there, but even at Intel, INTC up 33 cents. There's some good moves in technology aside from Amazon's earnings. And I really look at Amazon and say to you, keep an eye on Amazon in terms of retail. I mean, that's what they're all about. They're kind of an entity to themselves. They're the biggest online retailer. If things aren't going as well, they're spending too much money to get sales. There's competitors out there. It's not so much the whole tech sector. People don't look at Amazon and say, well, however Amazon's doing, that's how the whole tech sector is doing. It's more like Intel's that company or Google's that company. All right, and again, Microsoft can be looked at that way as well. So again, when you look at Amazon, make sure you take it with a grain of salt in relation to technology. Now, it does have an impact on the Qs, the QQQ, NASDAQ 100, but again, overall in the tech sector, the NASDAQ, I wouldn't look at it as a big barometer for how the overall market will perform based on those earnings. All right, let's go over to a couple other things. Let's go back to the SPY, and I just want to show you again the 133.30 level, which we hit a couple days ago last week, which is right here. I think that was last Thursday we nailed that level. That triggered me to take a position in SDS, which I'm still in the money on, but the key is, again, knowing where that level comes from. Educationally, this is important, guys. Look at your daily chart. This is what I went over yesterday as well. Gap fill, take that line, just draw it across. You get that exact line, 133.30. Even more importantly, go back to 2007. The high from 2007. This is when the market was at its all-time, not all-time high, but essentially at their major pivot highs here. And take that pivot top and drag it through the pivot top on the mid-year, early year 2011, the highs from 2011, and that line coincides perfectly with that same level. So again, this is why I keep saying that that level's huge, and you have to respect it. Now we get through all this area, then it really opens the market up to probably go to this pivot high here, right around 134.60 to 135.50. This area would be your next level, only if you take out that point of interest. As long as you stay below it, there's not much the market can do in this scenario, okay? All right, so just keep that in mind, guys. Let's go on to a couple other charts out there. The dollar again, if the markets are up, what have I always said? I've always taught you guys, if the market's up, the dollar should be down. Let's take a look if that's true today, and that is absolutely true. The UUP is down 12 cents on the day. This is the ETF that tracks the dollar. Let's go to the intraday chart. There it is. It's a little bit off the lows, but you can still see from where it closed. This is where the UUP closed yesterday, where the dollar closed yesterday. Look at how nice of a down day it is. And again, that's propelling this market for the most part to have a pretty solid move up today. Again, light volume is adding to it. Optimism from China is adding to it. All those factors are kind of giving it a little bit of fuel. By the way, the financials are rallying today as well. Big move on the financials, especially Goldman Sachs. Goldman's up about $3.50. Nice little topping tail here. I know a bunch of my traders in the intraday stock chat and from Traders Life 24/7, which is our social network here at InTheMoneyStocks.com of elite traders. A lot of them played this topping tail, and it really has worked out well. Beautiful topping tail. Market came down, bought up, but again, never took out the high of the topping tail, so it's still valid. And you can see the sell-off in Goldman continuing there. Now, the key about Goldman and what I wrote about on a blog entry today on the Rant and Rave blog was that it actually hit major resistance at this high pivot. If you go to your daily chart, check this out, guys. Look at the pivot high going back to October 27th and 28th. And then look at the 200 moving average, which you pierced as well. This is a major level on Goldman Sachs. My guess is you actually see a Goldman pullback in the coming days. And I also have to say, where the financials go, the overall market goes. And that's what's leading to me to believe that as the financials get into resistance levels here and look to pull back, you probably do still favor a little bit of downside, especially as long as the spiders have not taken out that 133.30 level. Again, remember that level I just showed you on the SPY. As long as you don't take out that level and the Goldman Sachs of the world are into resistance like this, I still have a little favoring to the downside. Thus, I'm obviously in the SDS in the money right now on that trade from last Thursday's entry and so forth, okay? Now, let's take a look at other financials. JP Morgan. JP Morgan obviously overbought. I still don't like this as a short, though. I think the Goldman's the best short out there. The reason why I don't like it is because you have a ton of support right here of two moving averages coming together to form a necktie in the next couple days. And again, a little bit of consolidation here. I do think it's going to pull back with the rest of them, but there's probably safer plays by shorting Goldman Sachs. If we take a look at Citigroup, let's take a look at this. Citigroup, again, trying to get up to the 200. Might still have a little bit of energy to get up to that 200. Again, I don't really like this short either, although you are into a little pivot top right here as well today. I'd still prefer to see this hit the 200 moving average. And last but not least, I think we should take a look at the XLF. XLF has just had an amazing move, kind of mimics the JP Morgan chart, which makes sense. But again, if you want to know where the top on this XLF will probably be, it's actually pretty close, but not quite achieved yet. So again, Goldman's hitting resistance, but some of these other financials may have just a little bit more in them. And clearly, we can see this pivot low right here from over here is going to be resistance, and that's at $14.60. So $14.60 is the level, in my opinion, to look to short the XLF if it gets there. All right, now again, the key is, folks, I'm trading intraday, rocking it. Actually, a great scalping morning this morning. I mean, I made a lot of money, so did the traders in the intraday stock chat. For those of you that are into day trading that want intraday analysis, want to be able to view my charts live, take the 7-day free trial to the intraday stock chat. In addition, if you are a swing trader and you work 9 to 5 and you really can't be behind the computer 24/7, then your goal is to take the 7-day free trial of the research center here at InTheMoneyStocks.com, where we give out swing trades. I actually put out a new alert today. It hasn't triggered yet, but it is out there. Probably gets triggered in the next couple days for a great trade. I can't reveal obviously what it is, but it's going to be a no-brainer for some good movement. Probably a good 10% to 12% gainer in a week or so. So again, take the 7-day free trial, get that alert, get all the other alerts as we continue to just print money here in 2012. I have to say, let's take a look. I just want to show you guys some small caps. The small caps so far that I've featured that I've run this year, HIMX at $1.01 went to essentially $1.50. SMSI from $1.17 to over $2 in 2012. These are just 2012 in January plays that I've given out. So 50+% gain in SMSI, 50+% gain in HIMX. What else? DHT I gave out at something like 77 cents. It's at $1.12 now. Great play there. Another stock I gave out right around 75 cents, hit 94 cents today, QTWW. All right, these are just a sampling of the smaller cap plays. So my point is here is we do it all. I don't care if the markets are going up or down. We're going to be long or short the market depending on what it's telling us. In addition, I give out small cap, mid cap, large cap plays, ETF plays on the market, 2 times ETF plays on the market like SDS. There's something for everyone, swing trading and day trading. If it's in play, my policy is I'll trade it. I don't discriminate in any form of life. If it's in play, I trade it. Whatever direction it is, doesn't matter to me. And I can pass this proprietary knowledge along to you guys, let you guys profit off my calls. And then when I teach you the methodology, it's like imagine you can't see, you're blind, and all of a sudden they give you the power of sight. And if someone can do that to someone who's blind and let them see for the first time, that's the same kind of analogy used here to describe your way of coming to InTheMoneyStocks.com, utilizing the proprietary nature and the analysis, and making money all your life from here on out. All right. In any case, I got to get back to trading, folks. There's plenty of action going on here. If we pop the spiders back up, let's just take a look at what's going on. Yeah, markets are kind of hovering right here. A little bit of a small bear flag starting, but again, I don't know if there's enough volume in this market for it to play out. But again, as I said, I got to get back to trading. I will talk to you guys all later. Come here, take the 7-day free trial to InTheMoneyStocks.com.